Welcome back. Almost near the day's highest point on the Nifty. I think just about 5 or 6 points away. 12,219 on the Sensex, and that's not very far away from the day's high. Again, about 45 odd points on the Sensex. As we head into the last 45 minutes of trade, or even less now, the market's actually throwing up some interesting signs of revival, at least trying to go back to more respectable sort of levels, claw back above the 3,700 mark for one. We've got a special guest right here in our studios, Aneesh Srivastava, is CIO at IDBI Fortis Life Insurance Company. Aneesh, afternoon. Welcome to the show. Appreciate your time here. First off, as a money manager, how are you positioning yourself, or how have you positioned your most of your investments or portfolio going into this big event, that Saturday, the election outcome?
See, elections are the events, and best approach for such events which are absolutely uncertain is that you cut down the risks from portfolios, because events can work out in your favor or can go against. So we would like to play the markets again once a little more clarity is there. So we have created a kind of a defensive portfolio, increased a little cash in the portfolio so that in case opportunities are there, we are in position to capture that.
Well, Aneesh, would you believe that the market is being irrational with the run-up that we've seen all through?
Well, very difficult to say that is irrational, because globally a lot of funds have started deploying money in markets, and we have seen that they had left out kind of a feeling. So India being one of the most attractive markets, they have kept on deploying despite domestic funds not being so aggressive on the markets, but foreigners are. So they are buying aggressively.
And you perhaps, what would your strategy be after the outcome? We've got to come to what you think or will happen on Saturday, but what would your strategy be? Get back into the market if you get a 10% dip or even lesser, you get back into the market?
Well, 10% dip kind of opportunity, perhaps we would be taking it, but otherwise approach would be that we would buy stock specific wherever valuations are attractive, wherever good opportunities are there, we will buy and accumulate those stocks. Otherwise, at these levels of valuations, we are a little uncomfortable. Reason being that what we are forecasting is that best case scenario 5%, 0 to 5% kind of earnings growth in FY10 for Sensex. And based on that valuation, market is already trading at around 14.5 times. So when earnings growth is 5%, it's very difficult to justify 15 times kind of a multiple.
So you'll wait for earning upgrades?
We will wait for the earning upgrades, maybe that we would diversify and increase number of stocks in the portfolio. Pick and choose more from the mid cap wherever we see that clarity is there. I mean, that's the only way perhaps in these kind of situations to build in the portfolios.
But you have enough ammunition to invest in the market. Are you sitting on considerably higher level of cash?
Yeah, that's right. We are sitting on around 15 to 20% kind of cash at these levels.
And your peer set?
I was reading today's newspaper, it's around 30%.
All right, so a lot of money waiting to come back. Just to get back to the outcome, from your perspective, what's the best case scenario? Everybody wants, nobody wants actually the left third or the fourth front to come to power. But what is the best case, which would perhaps provide some more impetus to this rally?
Best case is like this, that we as a country want a stable government. Now, gone are the days when we could have said that, okay, fine, 300 plus kind of a seat coming to a single party. This is a coalition government, and hence my expectation is that if any, whether UPA or NDA getting 190 to 200 kind of seats, would be in position to form the government.
But if they do get that, if a coalition gets 300 plus seats, UP or NDA, what does it do to the market? Because, some would say it's more of the same. You've had a UPA government for the past 5 years. They come back to power, what changes? Perhaps the risk of left coming back is removed, but that's about it. What does really change for the market? Do you get increased flows from institutional investors abroad? Do a lot of people start putting money back into the market? How much is actually hinging on this one event? That's the question.
As I said that, I wish it was 300, so it would not be 300. So anything more than 200, which means that we are heading for some kind of a stable government. So point number one. Second is that, as I said, large chunk of cash is still, especially from domestic markets, is still not deployed in the markets. They have missed out. Many guys have encashed their positions because they were expecting that these events may be uncertain. So once that happens, I am sure that a lot of money would start flowing in the market again, point one. Second is that at least there would be a little more clarity in terms of policies. During the election phase, there has been no policy announcement. Country needs some kind of policies to stabilize in these kind of macroeconomic environment. So at least, if same government continues, they have understood what the problems are. So it will be very easy for them to put in place the fresh policies so that country keeps growing, economy keeps doing okay. That's the hope. That's the hope. So if that materializes, well and good. So that is the reason for optimism in case UPA comes back.
But in case it does come back, can this market not correct? Can it actually jump up and people are waiting for a correction to deploy the cash, and this market could well jump up 10%, 15%, 20%?
Well, it can happen. Only thing is that it would be against the fundamentals, because valuations in any case with 5% kind of a growth are at 15 times.
But
So, which means that markets can go up, markets can remain irrational for a reason.
Very relative. At 8,000, a lot of people said, well, very few people said, let's buy, let's get into the market. You wouldn't get an opportunity. At 16,000, people are still going to say, well, we are fairly valued. So valuation is relative. Perhaps what's important is also the amount of money, as you mentioned just a while back, which is sitting on the sidelines. Is that likely to create some cushion or comfort to cushion any sort of fall if we see a correction? In any event, in any outcome.
I agree with you. Yes, it would create, but historically what we have seen in medium to long term, normally valuation is the guide. Funds can go ahead and buy, but even then if things are expensive, someone from the globe, some global players would come and ultimately sell. So what we have to see is that sustained recovery of global economy, which is even today a big question mark. Okay, all the data that we are getting, whether from IIP data, whether export data, it's not so encouraging. What has changed for India is, yes, that commodity prices have come down, crude prices have come down, interest rates have corrected. So all that is giving a trigger. But do we see a sustained recovery in economy, or for that matter corporate profits? That is something still far away. Or at least 6 months away. We have to still see that. So what has happened is that ultimately price earning multiples which had contracted have again expanded. But whether that would be supported by real earnings, that is still a question mark. So once event is out, perhaps some guys who have left out, they would start deploying money in the market again.
Which corners of the market do you think will provide the best money making opportunities? Irrespective of the kind of market you have, you always have stocks which are multi-baggers. I'm not asking you stocks, but sectors or corners where perhaps investor interest will be very large.
So irrespective of the government, actually, sectors like construction would be doing reasonably well, given the fact that interest rates have come down, given the fact that irrespective of the governments, that is the place where money would be spent. So construction and infrastructure sector is one sector.
Real estate, some of the real estate companies as well?
Real estate had been better down, yes. So of late we are seeing that a lot of companies are in position to raise money. So once they have money, I'm sure that they can complete the projects, and the kind of discounts that they were giving in general to sell off the properties, or the pressure that they have, would come down substantially. So yes, there is a possibility, but real estate again has run up. Right. So we have to wait and see that how things stabilize.
But the issue of survival on real estate, Aneesh, has disappeared now, with the Unitech and DLF all coming up with latest and new plans of saving the debt and figuring out their balance sheets.
The large part of the concern is, yes, to some extent addressed, because some investors have shown interest in them. They have given their money, and ultimately, if they can construct the projects, if they can sell it, and if they can sustain the prices, I think the worst is perhaps over for them. So
would you follow some of these investors who have put money into the DLF equity?
No, we don't do that.
You would not. Why is that? Because
we would follow our own valuations, and then based on that we would decide. Maybe that some other attractive opportunities are there to get into the markets.
And you think you'd get like 10% of the peak kind of values again for some of these real estate stocks, or no? Reasonable fall can be expected once again. You'd get better prices basically.
Well, these are the high beta stocks, you have to understand that. So if any negative outcome, you would find that there is a substantial correction happening in these kind of stocks, and hence perhaps that would be an opportunity.
Are you sticking more to large caps or mid caps right now? When you talk about infrastructure being a hot sector and you're thinking of getting in later post this, post the election verdict, what are you sticking to?
Well, as I said that we have created a defensive portfolio, so we have cut down high beta stocks and the small cap stocks.
So will you buy again? Will it be large caps again?
Then again, that we have to pick and choose stock specific. Then it would not be a generic stock, whether it would be large cap or small cap. But we had been carrying small caps, and which we have reduced the positions now because of this big event in front of us.
So, okay, just a flip side. In case the UPA comes into power Do you feel that this time around the left's power will be diminished in the coalition, substantially diminished, and therefore there could be an additional fillip? It will be better reforms, better business, pro-business growth agenda.
Well, it depends upon the mindset of left actually. What they have done in West Bengal is reasonably good. Once they are supporting the central government, I see that what kind of demands that they have. So it's very difficult to comment that what would be their approach.
Any other sectors apart from construction infrastructure that you were talking about? Any of the other sectors where you think interest will be large?
Well, power is another sector where you would find that a lot of spend coming in. So that is another area where perhaps optimism would be there.
All right, Aneesh, great having you in the studios with us. Hope to see you a lot more often. And thanks very much for your perspective. We'll take a quick break, leave you with some of the other big opinions coming in. These are management